Tonight, we look at a nation on the brink. Argentina, rich in history and culture, is once again staring into an economic abyss. For decades, its people have endured a relentless cycle of soaring prices and a currency that loses value almost daily. Imagine going to the grocery store and finding that the price of milk has doubled in a month. For millions of Argentinians, this is reality. The peso has become a symbol of instability, pushing many to their limits. In desperation, a radical idea gained traction: dollarization, abandoning the peso and adopting the US dollar. Proponents argued this would finally kill hyperinflation and restore predictability. The dream, a currency people could trust, a last-ditch effort to break the cycle of economic pain. For ordinary Argentinians, it meant the hope of saving money without fear of it evaporating. For businesses, it offered a chance to plan for the future. The government sold this vision as a cure for chronic inflation, promising no more printing pesos or sudden devaluations. But as we see now in late 2025, this dream is colliding with brutal reality. The path to dollarization is fraught with challenges the initial optimism overlooked. The very problems it was meant to solve, lack of reserves, massive debt, a fragile economy, are blocking its success. Argentina's dollarization gamble is fast becoming a cautionary tale. At the heart of Argentina's crisis is a destructive feedback loop. Inflation erodes the peso's value, so people rush to exchange pesos for US dollars. This constant demand drains the nation's foreign reserves. The central bank's dollar stockpile, needed for imports and debt, shrinks rapidly. Argentina owes vast sums to international creditors, debts denominated in US dollars. As the peso weakens, the government needs even more pesos to buy the dollars for payments. This debt burden drains reserves, leaving little to stabilize the economy. To dollarize, a country needs enough US dollars to swap out every peso in circulation. Argentina simply doesn't have this. The central bank's net reserves hover near or below zero. Without a sufficient war chest, the plan is more fantasy than policy. This vicious cycle of high inflation, crushing debt, and disappearing dollars creates extreme fragility. Each element makes the others worse. Inflation drives dollar demand, depleting reserves, making debt harder to pay. Poor credit means Argentina can't borrow to replenish reserves. The government is caught in a web of its own making. Dollarization now looks less like a key and more like another lock on the door. The plan is failing because the prerequisites for its success were never met. Argentina's economic health depends on trade, selling goods abroad to earn US dollars. Agriculture is the engine: soy, corn, wheat, beef. Good harvests and high prices bring in dollars. Droughts or low prices slow the flow. This reliance makes the economy vulnerable to weather and global markets. On the other side, Argentina must import fuel, machinery, and technology, all paid for in dollars. Strict controls on imports save dollars short-term, but stifle economic activity and growth. Factories can't get parts, businesses can't invest, and the economy stagnates. China has become a crucial partner, buying agricultural exports and providing financial lifelines through currency swaps. These swaps let Argentina borrow yuan to pay for imports or exchange for dollars. But this reliance deepens dependency on China, creating new vulnerabilities. If relations sour or China's economy falters, that lifeline could vanish. Argentina walks a tightrope, balancing its need for China's cash against the risks of over-reliance. This trade dynamic complicates the dollarization debate. The country's future is tied to both global markets and shifting alliances. As dollarization stalls, Argentina fights to defend its collapsing peso. Strict currency controls, known as the CPO, limit access to dollars, hoping to slow the peso's fall. But these controls fuel a black market, where the blue dollar rate exposes true demand. The gap between official and black market rates distorts the economy, encouraging smuggling and discouraging exports. Sky-high interest rates are another tool, meant to keep money in pesos, but they choke business investment and consumer spending. These measures are desperate attempts to hold back economic gravity, Instead of restoring confidence, they signal panic. The system grows more complex and confusing, eroding trust. Temporary fixes can't mask the deeper lack of faith in the peso. Confidence is the invisible glue of any economy, and in Argentina, it's gone. Years of broken promises and policy chaos have driven investors away. Argentina is cut off from international markets, forced to pay sky-high interest rates when it can borrow at all. This isolation starves the economy of capital, fueling stagnation. Capital flight is rampant. Individuals and businesses move money abroad, further depleting reserves and weakening the peso. The failed dollarization plan has only deepened the crisis of confidence. Investors see a government lurching from one failed policy to another. The result: a vicious cycle of distrust and decline. Rebuilding confidence will require years of consistent, credible management. For now, Argentina remains trapped by its own instability. The focus on dollarization misses a key point. Changing currency isn't the same as fixing the economy. A strong currency reflects a strong economy, not the other way around. Real solutions require deep, structural reforms. Cutting wasteful spending, improving state efficiency, and broadening the tax base. These are politically painful but essential steps. Argentina must also create a better environment for business and investment, simplifying regulations, ensuring rule of law, and fostering competition. Without growth and productivity, any currency arrangement will fail. The dollarization debate distracts from the real disease, a dysfunctional economy. If Argentina tackles its deficits and implements reforms, confidence and investment will return. The currency will strengthen on its own merits. There are no shortcuts, only the hard work of building a sound, productive economy. Sustainable prosperity must be earned, not imported. Argentina's struggles unfold as the global economic landscape shifts. The US dollar still dominates, but China's rise is challenging that supremacy. China is now a key trading partner and lender, offering alternatives to the Western-dominated system. This gives Argentina more options, but also new geopolitical risks. Rising US interest rates make the dollar stronger and borrowing costlier for countries like Argentina. Dollarization means importing US stability, but also US monetary policy, with no local control. Argentina's crisis is a case study for other developing nations. The world is watching. Will dollarization fail, or will Argentina find a new path? The outcome will influence how other countries approach their own currency and debt dilemmas. In a multipolar world, Argentina's choices send ripples far beyond its borders. The lesson from Argentina's crisis is clear. There's no magic bullet for deep-rooted economic problems. Dollarization promised a quick fix, but proved an illusion, built on hope, not reality. The country lacked the reserves, discipline, and confidence for such a radical shift. The attempt failed to solve old problems and created new ones. A currency is only a mirror of economic health. Changing it doesn't cure the disease. Real recovery demands structural reforms, fiscal discipline, and political will. Argentina's experience is a cautionary tale. Credibility is hard to regain, and prosperity must be built, not decreed. The hard road ahead offers no shortcuts, only the slow, steady work of rebuilding trust and growth.